5th October 2023, Thursday, MAO with Cal. Wow, the White House is in real serious trouble right now. McKenzie out. This is the first time ever in the US history. And the US crude oil is 17 days away from basically running out of supply. Is this going to be the one itself? So more detail coming up. Let's go into it right now. All right, thank you, Ames, for the kind sponsorship, and everyone, disclaimer applied as usual. Now, very important thing is this, guys. Take a look here. Now, we are actually 17 days away from a potential lack of supply in the Strategic Petroleum Reserve, SPR. Now, this is really historical because since 1990, right, the average itself has been there, and now we are still 30% above the target price that US set to refill them. That means that US is looking at $60+ at current price right now is at 30% and higher. So the thing is this, tomorrow OPEC will be making a meeting. And of course, if they are going to continue to cut the production, this will again bring crude oil price up. Now, recently we saw the crude oil price came down, right? I remind everybody at about this $95 to take some profit. And I'm glad you did that because now will be a good time to buy back again. So crude oil seemingly at about $94 to $95 is artificially brought down all the way to now 83. So it's $10 away, but it's still very far away from the $66 that the White House wants to buy. So the thing is right now, everyone focus with me. You can see that last time the RSI hits about 30, that was a bottom, hits the 30, that's the bottom, hits the 30, that's a bottom, right? So for 3 times in a row, there is the great opportunity for us to buy into the market. So the question is right now, is this a good time to buy? And my answer to you is absolutely yes. So the thing is this, you look at the RSI right now, so it goes down lower to the 30 zone, likelihood to see the crude oil coming down to about $81 to $82. That means that this is a positive divergence. So this will basically bring back crude oil again. So traders, we are all watching about $81 to $82, which I think that you should look at it yourself. Now, of course, people say, Kel, if you're looking at recession, don't you expect the crude oil to go down? Yes and no. Now, basically, by right, for your recession, we should see crude oil coming down. But I think that right, there's something must kickstart the recession first. And one thing, it will be the energy prices. Now, if you look at it, my TWB chart is all very clear. At $95, that was where the resistance was. And then when our color changed over from yellow to red, that confirmed the selling. Then came with my indicator, the boy sell, the momentum came in, so there were triple sell signal. So from $92 all the way to $83, we've been shorting crude oil and been making some good money. So if you expect the crude to go lower, which we are also looking at that, so it should be about $81 to $80, that is on the CFD level. Now, one thing to note is that why am I saying White House having a big issue? Because Kevin McCarthy is replaced, all right? Apparently, this is really crazy. This has never been done before. The first time a US House of Representatives speaker has lost a no confidence vote. All right, so what is happening? Apparently now, internally, the Republicans are not happy. So obviously, the Democrats is in one party, and half of the Republicans is having some issue right now, and that's why they oust McCarthy. So the question is this, what is happening? Because there was a very incredible, tiff between the two Republicans, which Gates and McCarthy, that was back in 6th January. They already didn't meet eye to eye. And of course, again, McCarthy make his ground and stand on the 3rd October. And we know that it's because he keep on repeating this. The US debt has hit $33.44 trillion and $275 billion of debt in a single day. I mean, seriously, this has never been done before. So it's like going at a $1 trillion mark per month, guys. This is insane. Because why? Imagine if this is going at $1 trillion mark, who will want to lend the US government any more money? Because it's just a matter of time, this potential Ponzi will crash. So that's the reason why you must understand how a national debt runs. So basically, right, as it climbs up, right, the national debt, which is what you see right now, things will get pricier with the higher interest rate because the Federal Reserve will have to do more into that. And when that actually happens, less money for the businesses, and of course, potentially lowering the family income, and definitely fewer funds for the government programs, which Joe Biden is already slashing it right now, vetoing, and definitely it will impact living condition. And of course, this will hurt lifestyle. And obviously, when this all happens, jobs will be lost. And then what actually happen next? Obviously, is our going to see recession. So the thing is this, the crazy part of the 30-year now has hit 5% in 16 years. So we remember that this Bill Ackman was shorting the 30-year treasuries, and he said that we will see 5.5 very soon, and back it was in August, but everybody was just laughing at him. In August itself, that was where, you must understand, this is where the report came out, and at that time the yield was about 4.4%. So now you can see it's already at 5%, guys. This is no joking matter. And of course, this guy, Bill Ackman, is spot on once again. And you can see right now that yesterday the pullback was because of the ISM manufacturing data and of course the ADP figure. Now the ADP figure came out really a stunner. Expected job was 153,000 for the private sector, but only 89,000 came in. So of course, this is good for the Federal Reserve because that's what they want. But in short itself, that means that the private sectors are no longer looking out or giving jobs at the moment right now. And that will definitely hurts the unemployment side. And of course, we all know that once unemployment data start to go higher, this is a perfect cocktail for a recession. So now the thing is this, we are looking at the initial claims tonight at about 8:30. If this number shoots past 210, we will have a little bit of volatility in the market. At one stage itself, people say, okay, fine, that's what Federal Reserve wants. But on the side itself, people say, oh dear, that means that recession is coming. So it will be a negative number. And of course, for non-farm payroll, the target is at 163,000, but based on what we see for the ADP, it could actually send down to about 120 to 130 level. And if unemployment data now this time around is at 3.8, the market is at 3.7, I don't think so. We could see a 3.9 or even a 4. If it hits a 4%, that will definitely ring the bell. So you can see right now, since July, the market has been going down because the yield was going up and the dollar going up at the same time. The big question is this, guys. If this will continue, what will happen? So we can see right now the banking credit is contracting right now. You can see the last time it happened was back in 2009 and 10. Now bank credit is officially contracting. And if that's the case itself, what will happen? Now look at it. The average interest rate on a 30-year mortgage raises to 17.8%. That is the highest since year 2000. So in short itself, right, imagine if I would have a 500,000 mortgage, all right, I would pay really nearly 8% for it right now. That is $4,000. Guys, this is crazy. I mean, who can pay $4,000 just for mortgages monthly repayment? So this is nuts, guys. That's why a lot of people are complaining right now. And this is not going to stop because we all know that we are in a very catch-22 positioning. And of course, if you look back again, back in the probability of a recession, this is based on the yield curve 12 months prior to that. Now, we saw it happen in 1974. It happened again in 1981. And of course, it's only 2 times we saw this since 1960. So both of them, we ended severe economic downturn. So where are we right now? We're the same level that happened back then again. So what do you expect? It can't be soft landing. Very high chance we're going to have a hard landing. And of course, this will signal strong contraction. So tonight, data, this week data, all will reflect on its own. So the reason why now I'm very concerned is because I've been telling you this to take a short position in the US market. Now, last night, we basically went long, we profited. But then again, I realized that my KSI stays red, so it's not a good sign. My KSX stays blue. That means that both big boys and the market sentiment now is still bearish. And of course, with the 2 MAs now in a way converging into one liner, that means that the bearishness is going to continue. And of course, the downside potential could be 32,716, which I think that tonight could basically trigger. So traders, we need to watch. And of course, the one thing to note, our Tim Cook, right, has sold 41 million of the stock, all right, in the market, and he has been selling. So question is this, we all know that Tim Cook, when he sells the Apple share based on his history, usually the stock market will come off. So is it because he knows something that we don't know? I'm not too sure, but all this information is brought to you by us. Hopefully you can get something out of this and know what to do for today. All right, so like, subscribe, and share my video. This is Cal signing off. Take care. Have a great day. Bye-bye.